Global indices are in the midst of the most volatile period for equities in quite some time, spurred on by a crash of emerging market currencies. Major equity gauges began to slide last Thursday when a basket of currencies, most belonging to emerging economies and various Asian countries, started to show unexpected weakness. The 20 most traded emerging currencies have lost about 10% in the past 12 months. This equates to the worst annual slide since 2008, with more than $460 billion of market value wiped from emerging market equities. Worryingly, Eurozone inflation figures released Friday have added to emerging market concerns. Inflation within the bloc remained well under the 2% target that the ECB set, printing at 0.7% for January. The disappointing data, which has been driven by falling energy prices, adds pressure on policymakers, who must decide whether or not to cut interest rates next Thursday. Focusing on the US, Federal Reserve policymakers decided to trim bond buying for a second straight meeting. The Fed will cut bond purchases by a further $10 billion to $65 billion, citing improving labour market conditions and encouraging economic growth. I'm Jess Ko, and that was the 60-second market update.